Welcome to that Trademark Life podcast. And today I have my friend Steve Ryan.
How's it going?
Good. How are you?
I'm good, thanks.
Okay. You are my mortgage guru. Did you know that?
You've told me that. I love that. I should change my handle to
Yes.
that on my email.
Mel McCullough's mortgage guru.
Yeah.
Because I know nothing about mortgages and I don't want to say that as a realtor, but I always just tell people, call Steve. And that's my answer.
Yeah, that's good. I mean, lots of times people try to jump outside of their field and then there's real I'm like, yeah, talk to her.
Yeah.
She knows what she's doing.
It's a good partnership.
Yeah, exactly.
So tell us where you are. What do you do? What's a mortgage broker? Where do you work?
Yeah, so I've been a mortgage broker for almost over 12 years now, which is crazy.
That is crazy.
I'm with Fresh Mortgage Co. I'm under Dominion Lending Center, which is the largest mortgage brokerage in Canada. What I do is I go to the banks on your behalf, essentially. So that we work with 35 different banks and lenders. I represent my clients to the banks, get them approved, figure out what the best rate is for them, and then the banks pay me so that the clients don't have to pay me anything.
It's free to use you.
It's free to use me, and I generally end up saving a lot of money because when we go to a bank to negotiate, we have hundreds of millions of dollars in our company that we get from, say, Scotiabank or TD or whatever that we do every year. So they give us a better rate than if you were to just go in to negotiate your own.
I'll remember that next
mortgage.
year.
Yeah.
April 25th. Write that in your calendar.
April 20th. I gotcha.
Next year. Okay, so I know there's like this mystery around mortgage brokers. People think you need to pay them. You don't have to. If you were to have someone that was like buying for the first time, like what are some tips that you would give people that are just like looking at getting into the housing market?
Yeah, I always tell people to reach out to me sooner than later. Like people always think, well, I don't need to reach out to a broker because we're not going to be ready for a year. But I always tell people to reach out as soon as possible, get started. And it's not like I'm going to force you to put an offer in on a house. Like I can get you, I always say I'll get you pre-approved, whether it's now or 6 months or 2 years, we'll figure out a plan. But lots of times people come in and they think they're ready, but there's something on their credit that they need to address and needs time to repair. So I always tell people just come in and talk to me sooner than later, whether you think you're going to buy a year from now or whatever, and we can get you figured out and make sure you're doing the right things. So,
and I remind people that a good realtor won't show you a house without a pre-approval.
Right.
So we actually won't go looking at houses unless you're approved. Doesn't have to be Steve, but like Steve, I trust. But just to know how much, so that people don't do two things. One, if they're not pre-approved and we're out looking for houses, they're either looking at something that they can't afford, and then they're heartbroken and they're sad, or they actually aren't looking at things that they can purchase. They might have an extra amount and they're discouraged with what they think that they can afford. But when they see you can be like, you can bump that up 50,000, 20,000. Those make a big difference.
For sure. And there's always different little things. Like if someone has a house in mind already, and I'll say, okay, this is what we need to do. But if it's, we wanted to go a little bit higher, well, then we can look at, maybe you could pay off this small debt and that'll, increase your buying power by 20,000, or we'll, add on your child tax income, or do different things to try and get them to where they want to go. It's not as, it's not just straightforward. Here's what you can qualify for. There's different things people can do to get a little bit higher and get where they want to get to.
So what are the biggest, mistakes you see people making before they buy a house?
Car payments are like the kryptonite of mortgages. It seems like most people have a car payment now, and they're just so, it's just it's how much you make versus how much your expenses are every month is essentially what it comes down to. And when you have a $800 or $900 car payment, it ends up costing people sometimes $100,000, $150,000 on what they can qualify for. So it's a big deal, and car payments just keep getting more and more expensive. So that's the number one thing I see that holds people back. I mean, it doesn't mean you can't have a car payment, but if you're thinking about getting a car and thinking about getting a mortgage,
get it after you get the mortgage.
Yeah, cars are not generally very hard to qualify for. Like they'll give them, at different credit, different interest rates, they'll give most people a car loan, but mortgages are a little more complex. So it's best to get the mortgage first and then deal with the car after.
What about things like credit?
Yeah, I mean, lots of times people just don't have an understanding of what
is credit.
What is credit, right?
Yeah.
It's a history of borrowing money and paying it back, essentially, or having access to it and not using it in abundance, basically. So a lot of people will be, I pay cash for everything. I'm going to have good credit because I never borrow anything. It's like, well,
if you didn't borrow anything,
they can't see that you haven't
used
I mean, there's options for those people too, but I mean, ideally if you have two different credit cards or credit lines and just keep them at nothing or close to nothing, and then your credit
make your payments
on time, and
you'll be good.
You'll be good.
We'll be house hunting in no time.
That's right.
So how did you get into this field of work? You woke up and you were like, you know what I like? Interest rates, houses, mortgage brokerage.
No, I had a mortgage broker and I was not doing anything in finance or anything. And I was just
What were you doing at the time?
I ran a group home. I ran Cherlo.
Okay.
And then I was like, I don't know why, it just seemed like I like real life math problems, as nerdy as that sounds. Like I just like to try and
person?
I was a math person until it got like super long formulas. Like I can do math in my head. Like I'm a head math guy, but then once it's like some big dumb long formula, I'm terrible.
You're out.
But I just like the idea of trying to like look at every angle and figure out how to fit it into the box so that it works. And I was like, I think I could do this. And then I looked into it and started doing it and just kind of hit the ground running.
And you've been super successful at it. Like top in Canada.
Yeah, I've been top 5%, I guess, the last 6 or 7 years.
Amazing. Congratulations.
Thank you.
That's so fun. Would you guys go to those conventions and just like talk mortgages?
We have. In the last couple of years, I haven't, because I've been so busy with kid stuff and different activities. It's just crazy. My wife and I like to go when we can. I mean, I don't really like talking mortgages as much as I like to just go on vacation. I just duck out of the conference and go enjoy
and hang out.
Yeah, exactly. But try to get to them when I can.
What do you see for the future of the interest rates? Everyone wants to know. You have a crystal ball.
Yeah, I do. It works perfectly, except the last 3 years, and it was just smashed into bits, and I have no idea what. No,
what is happening?
I think eventually interest rates are going to come down, but I think we're not going to see the 2% glory days that we once had. I think kind of 3.5% to 4% will eventually kind of be the new normal. When that's coming, I think it's kind of anyone's guess. You read one economist, and then 2 days later, some new number comes out for jobs and data and inflation, and then everything changes. So it's like, I always say with real estate, if you time it perfectly, you just got lucky. And I think it's the same with interest rates. Like we don't really know what's coming. Generally, if you buy sooner and hold for longer, you're gonna come out ahead. I mean, but to time it perfectly is just kind of like you would know with real estate. It's just lucky.
You never know.
Yeah.
Just be always putting yourself out there.
Yeah, exactly.
Do you hate the term that person came up with that was like marry the house, date the rate? Was that it? I heard it's like all over TikTok and like Instagram, and people were either like agreed or strongly disagree.
I just feel like I don't have that strong of opinion on a statement.
Can you do you encourage people to still buy? I am.
Well, I think like what it comes down to is, regardless of what happens with everything else, supply and demand is still the number one factor. And there's just, as you know, it's very expensive to build. So there's not a ton of buildings going up, and there's people coming here. It's just supply and demand, and there's not enough supply for the demand. You can still see there's not a ton of listings. There's anything good sells quick, expensive to build in general. Like it's just there. So, I mean, people are continuing to move here. There's going to be housing prices will continue to go up. Yeah.
When we are the most affordable place to buy in Canada, which is crazy. That's wild to me, but I love it. It just makes me happy. And I think eventually that the new home market, it is so much cheaper than the new build or the resale market is so much cheaper than the new home market. Eventually, they have to start closing the gap.
Yes,
on them.
And you can see like the federal government is trying to do.
Yeah. Okay. Do you know the details on that? Everyone's talking about it.
Yeah, and I have never gotten any
details.
Like 30 years for first-time buyers buying new construction.
Yeah, and then we have to figure out what the new construction equals. Is it like never been lived in? Is it a sign up for?
But have you got any more information on that? Then
no, I just know that it's first-time home buyers get up to 30-year mortgage amortization. But I don't really know if that's like really going to do anything. I don't know a lot. I mean, we have some, but there's not a ton of people with the cost of new homes that are first time home buyers.
Right. I think the optimist in me thinks that at least they're acknowledging like this is a problem and they're trying to do something. I don't think it's the right solution yet, but they're like, okay, new buildings are too expensive. It's something. So that it's like, it is a problem and they're trying to fix it, but they're probably not going about it the right way yet.
I don't think that it's 100% there. I would love more details. If anyone has any details, I'd love to know if it is sign up for a new build. Is it a purchase of a spec house? Is it an unoccupied home that has never been purchased? What actually qualifies as a new build is very like loosey-goosey.
I found like the same 2-sentence quote in 3 articles, and that's all they have. Yeah.
So if you get info, then we can come back on the podcast and then we can share the news with the people that are going to be asking for the info.
But you're right. Like a lot of new buyers
they're not first time home buyers in the new home market. Right. There are some, don't get me wrong. We do have some, but a lot of the people that are buying a new home have, just because of the price range. It's the second home. It's their stepping stone, or it's their dream home, their final home. It hasn't been a ton of new homes.
Yeah. No, I agree.
So what's the biggest myth you see in your industry that you would like to debunk?
The down payment
producer
thing.
Nicole liked that question.
She got excited over
there.
The down payment thing is always...
Ooh, yes.
Like, I swear there's just like...
weird info out there?
Some jerk at every water cooler in the office who's like, no, you need 20% down now. Like,
what is it? Tell us the D's.
You need 5% down for any purchase as long as you're living there. So if it's up to $500,000 and you bought a house and sold it, kept it as a rental, but you're moving into the new one, 5%. 5%. So the only time, obviously you have to have good credit to do 5%, but if the only time it's more than 5% is if it's more than 500,000, and then you have to spend 10% on any amount over 500,000. So
okay.
It's people always think, well, this is my second house. I'm not a first-time home buyer. I have to do 20%, or I have to do 10%.
It's your primary residence.
Primary residence is 5%, and people like, I don't know who, but there's a lot of people.
It's a guy.
It's that guy, and he's doing it a lot.
He needs to stop talking at the water.
No, I feel like I kind of like that he does it though, because I make people so happy when they're like, we don't have 20% yet, but we want to buy. I'm like, do I have news for you?
I have news for you? You only need 5.
Thanks, water cooler dude, who's giving wrong information, because then I become a hero.
You're a hero.
It's great.
Regina Market. Do you have a favorite city in the Regina Market? Do you have a favorite neighborhood?
Well, I live in Albert Park, and I love South, but that's just where I'm comfortable.
I know. You were South Ender yourself, right?
Actually, I grew up in the North End. That's
really?
A hidden secret.
Oh.
I grew up in Normanview West.
Oh.
Yeah.
What high school did you go to?
I went to Sheldon.
But that's in the South.
It is.
You tricked me.
I know. My sisters were like kind of in like dance, and all their friends from dance went to Sheldon. So they went to Sheldon, and then my brother just went to Sheldon, and they were like, "You want to ride to high school?"
And they were like, "I go to Sheldon."
But our feeder school was Martin, which was not
as good.
Not as good, and not like I probably would have liked it now with the academy and that kind of stuff. But
back then,
it wasn't.
Your friends weren't there.
Yeah.
I partied with you in high school.
Yeah, Campbell girl.
So the Campbell girls and the Sheldon boys.
Oh yeah. All the girls from the other schools came to Sheldon.
We went to your dances. Sheldon had better dances.
Yeah.
We were
the it boys.
You were the it boys. You guys wore your football jackets. Do you still have that?
I don't want to squeeze into it to be embarrassing. Look like
I'd like a picture of it, please. Maybe Haley will. Maybe Haley will put that on her Instagram.
Mm-hmm.
I'm requesting a picture of Steve in his high school football jacket to make Raising the Ryans.
Oh my goodness, you don't want to see it.
What do you think of your wife as the influencer?
I think it's cool. Like she doesn't think of herself as an influencer. She's just like.
I think of her as one, but I also know her very well.
Yeah.
So it's like,
it was
it's
like
just Haley.
Yeah. And it wasn't like her intention on the account to be like,
I know you guys started documenting your reno.
Yeah, exactly. And then it was just like.
People loved it.
Yeah.
It was wild.
Yeah, it was crazy. And so now I guess she's an influencer.
She's an influencer. And so are you though. Because you do the Jilly boxes.
Yes. I didn't do the last one.
Did they not give you one?
They never. Do you know that we pay for them still?
You still pay for those?
Yeah, I said they gotta send us.
They gotta send.
Chili.
You're so funny.
Yeah, it's
you're
good
wearing all the
promotion.
clips, and you're wearing all the shawls, and you're smelling candles and lotion and eye masks.
Yeah, I try it all out.
You try it
the
all.
The first one was like actually like I'm gonna mess with Haley and do this spot. Like,
was she okay?
And she thought it was hilarious. And then after that, then it was like,
you got to open the box.
You got to open the box now.
It's just a thing.
Yeah, just a thing.
Oh my gosh, it's so funny. Well, this is it for our part 1 with Steve, but I will have him back because I know people have tons. If you have questions for Steve on the mortgage side, on the purchasing side, on the financing side of a home, drop a comment, put it on my Instagram, DM either of us, because
absolutely,
I would like to get Steve on here more often, talking about mortgages and just debunking the finance world of real estate. And Steve, how can people find you?
They could find me on my website, steveryanmortgage.com, or they could text or call me at 306-501-9085 is probably the easiest way, or steve@freshmortgage.net.
That's perfect. Thank you.
Awesome. Thank you.